A pleasant evening to each and everyone. We are the Group 5 and we are here to tackle about the reorganization and liquidation. But first, let us introduce ourselves. I am Nestle Cavalles. For the starting, I'd like to discuss or define what is reorganization and liquidation. Reorganization is where the company does an overhaul of its current strategy, setup, and operations, meaning when they have financial troubles, new owners or staff, or structural change. Liquidation means is the process of selling off assets and using the proceeds to pay off creditors and shareholders. But when we talk about shareholders, of course, there is a business. And business. What is business? Business refers to an enterprising entity or organization that earns out or carries out professional activities. It can be commercial, industrial, or others. Business ownerships includes partnerships, sole proprietorships, corporations, and a lot more. When can we tell that a business is going into bankrupt? If the business is not properly managed, that causes to its failures. Business failures include poor management, excessive debt, and inadequate accounting. This result in the inability of firms to pay their liabilities. Okay, that is how we can tell that the business is going into bankruptcy. Insolvency versus bankruptcy. The term insolvent and bankrupt are often used interchangeably. It is technically incorrect. Okay, so insolvent. Insolvent, in simple explanation, are the business is experiencing severe financial difficulties and are unable to pay their debts. When a company liabilities exceed in its market worth or a debtor is unable to pay their debt, it is known as insolvency. Several circumstances that result in insufficient cash flow can cause a business to go bankrupt. Example of an insolvency. If a business has debts to repay lenders on the 15th of each month and starts to fall behind on those payments due to poor business decisions or unfavorable weather conditions, it may be entering insolvency. As a result, the company's cash flow suffers, making it difficult for them to make their payments when the 50th rolls around again. In this scenario, the business reaches a specific point of insolvency. How do we avoid insolvency, if you may ask? Person or business must engage in financial planning and forecasting. Effective management of a company's finances will help it to stay on to insolvency. Planning ahead, updating accounting softwares, and outsourcing some duties. Bankruptcy. It is a legal action begun when an individual or company is unable to pay back unpaid debts or commitments. It provides a new beginning for those who are struggling to make ends meet. Okay, that is the definition of bankruptcy. So there are some examples that I have found while doing some research. The top 10 companies that went into bankrupt, and I randomly select some result coming from that article. Number 1 is Pacific Gas and Electric Company, known as PG&E. It provides gas and electricity. It was forced to buy exorbitantly priced electricity from out of state, which resulted in massive losses. April 6, 2001, the utility company entered bankruptcy. That is when the PG&E entered a bankruptcy. Kodak. Everyone is familiar with Kodak since Kodak was the famous or the well-known company way back then, or the filming industry, if I must say, if correct me if I am wrong, but I do believe that this was one of the most known company before. Kodak was once the name in the photography film, and in the year 1888 it was founded. However, Kodak Company struggled upon the advent and rise of digital photography, and they were slow to transition to quickly dominant trend. January 2012 filed bankruptcy and sold off various patents to other companies. But the company rose from the ashes in September 2013 and continued to operate until this day. Some people might ask, how do we avoid bankruptcy? We can avoid bankruptcy through being conservative or be conservative. It don't assume every customers to going to pay and be optimistic about the future but not overly so. Second, have a written business plan. Describe strategies and tactics related to the things like sales, operating budgets, capital expenses, cash flows, input cost, performance objectives, and the means to track performance. Third, prioritize debt repayment. Prioritize secured debt such as loans secured by a piece of equipment and big interest debt. Fourth, eliminate unnecessary expenses. Fifth, stay in touch with lenders. Sixth, review insurance policies. Seventh, craft a retirement strategy. Eighth, take advantage of a tax reform. And meaning offers the business the opportunity to use extra cash from the tax savings to pay down debt and make strategic investment. With this, you'll not only be better positioned to avoid bankruptcy, but you'll be setting yourself up for success. I hope that these things that I have shared with you will help you to avoid bankruptcy in the near future. Bankruptcy liquidation refers to the process that involves the realization or sale of the assets of an individual or a business enterprise and the distribution of the cash proceeds to the creditors of the individual or enterprise. There are four classes of creditors in bankruptcy liquidation. The four classes of creditors are fully secured creditors, partially secured creditors, unsecured creditors with priority, and fourth, unsecured creditors without priority. But let me elaborate you what is fully secured creditors. For example, if a borrower defaults payment, a secured creditor has legal right to seize the borrower's assets, sell them, and pay off any remaining debts and that are owed to them. Okay. Second, partially secured creditors. It is a creditor whose loan is secured by asset of the indebted merchant, but the value of the secured asset is less than that of the loan. Example, a debt that is secured by collateral that is worth less than the debt. Example, 12 million car loan that is secured by a car that is now worth by 10 million only. Third, unsecured creditors with priority. Priority creditors get paid first from whatever is left in the debtor's state after exemptions and secured creditors. Example, domestic support claimants, usually ex-spouses support, wage claims, and some tax claims. The fourth one is unsecured creditors without priority. These are the debts where the creditors has not get extra powers to make you pay. Examples, they cannot take you home. That is the example of the fourth classes of creditors. What is the difference between priority and non-priority unsecured claims? First, priority creditors' claims are paid first, then the second priority, and so on. Non-priority unsecured claims come behind the lower-ranking priority claims, domestic support, obligations, including child support, to top the list. Debtor's petition, or known as voluntary petition. If the debtors owe unpaid amounts to 12 or more unsecured creditors who are not employees, relatives, stockholders, or other insiders, 3 or more of the creditors who have unsecured claims totaling $10,000 or more may file in the Federal Bankruptcy Court or creditor's petition for bankruptcy. The creditor's petition is called involuntary petition. If the number of unsecured creditors is less than 10, one or more creditors having unsecured claims of $10,000 or may be filed the petition. The petition of the creditors for bankruptcy may claim any one of the following. Creditors having priority. Debt that qualifies for special consideration throughout the bankruptcy process and will be paid before non-priority claim is known as a priority claim. This could include of investors who own unsecured bonds, bank lenders, staff members, the government if the taxes are owed, suppliers, and employees. The second one is creditors holding security. Any lender or creditors involved in the issue of a credit product that is secured by collateral is referred to as a secured creditor. Collateral supports items for secured credit. Collateral in the context of a secured loan refers to the items that are pledged as security for the loan's repayment, and assets are forfeited to the secured creditor in the event that a borrower fails to repay a secured debt. The third one is creditors having unsecured claims without priority. Debts that are not secured by the debtor's bankruptcy assets, those creditors with general unsecured claims are classified as non-core claims because they do not receive any special priority under the law. The priority of the debtor is reported into 3 categories. Real property. Real property is the term meaning property means that land and anything growing on the attached to or erected on it, including man-made objects such as buildings, structures, roads, drains, fences, but not anything that can be removed from the ground without damaging the soil. Personal property. Items owned by people such as furniture, appliances, or electronics. In short, for these items differ from immovable property because they are movable. It can be tangible such as stocks and bonds, or intangible such as personal property items owned by people such as furniture, appliances, or electronics. And it can also be intangible such as stocks and bonds, or tangible such as clothing or art. That is a personal property. Property claimed as exempt. Property exemptions protects items of nominal value that may not be necessary to earn a living but have little effect on meeting creditors' obligations. Example: used clothing or household goods have little resale value for creditors who seize and sell them. Valuation of property are at market or current fair value. Fair value refers to the actual worth of an asset, which is derived fundamentally and is not determined by the factors of market forces. Market value is solely determined by the factors of the demand and supply, and is the value that is not determined by the fundamental of an asset. Second, a statement of financial affairs also accompanies the debtor's bankruptcy petition, meaning the statement of financial affairs, or SOFA, is a required form in a bankruptcy filing. This form delves into all of your personal matters so that the court can fully grasp the financial situation that is causing you to file. 2 versions of the SOFA is one for the individuals and one for the non-individuals, usually as companies. creditor's petition, or involuntary petition. The outstanding balance must be liquidated, some payable immediately or some point in the future. The outstanding balance must be unsecured debt. It must appear to the creditor that the debtor is unable to make payments or has no reasonable prospect of being able to make payment. Okay? The debtor is not paying debt as they come due. The debtor may be subject to an involuntary bankruptcy petition. Bankruptcy law does regulate the manner in which the assets of the debtor are distributed. Instead, distribution of the debtor's asset is solely within the discretion of the trustee. Second, Section 17 of Republic Act 10142 attempts to seek legal of other resource against the debtor outside these proceedings shall be sufficient to support a finding of indirect contempt of court.
I'm Lydell May Pialagor. I'm going to discuss about unsecured creditors with priority. Unsecured creditors can be classified into unsecured creditors with priority and unsecured creditors without priority. If adequate cash is not available for all unsecured creditors, the available cash needs to be paid in full to unsecured creditors with priority. Debts which are found in this category include administrative costs, claims arising in the course of the debtor's business or financial affairs after a commencement of a creditor's bankruptcy proceeding but before the appointment of a trustee or order for relief. Claims for wages, salaries, and commission including vacation, severance, and sick leave not in excess of $4,000 per claimant. Earned within 90 days before the date of filing petition for bankruptcy or cessation for the debtor's business. Claims for contribution to employee benefit plans arising within 180 days before the date of filing of petition for bankruptcy, cessation of the debtor's business. So claims by procedures of grain against a grain storage facility or by fishermen against a fish storage or processing facility not in excess of 4,000 US dollars per claimant. Claims for deposited for goods, services, or for personal, family, or household use of a depositor not in excess of 1,800 per claimant. Claims for alimony, maintenance, or support of a spouse or former spouse or child of the debtor under a separation agreement, divorce decree, or a court order. Claims are government entities for various taxes or duties subject to varied time limitation. So note, the settlement of the above debts would be in order specified. So property claimed as exempt. So oh, no. Uh, an example of unsecured creditors with priority. So, imagine a person or a business owns money to different creditors, but they're running low on cash. Some of those creditors are more important to pay back than others, and they get special treatment. These are the unsecured creditors with priority. So these special creditors have debts that are considered more urgent or essential to pay off. So they include things like certain taxes, unpaid employee wages, or money owed to government agency. If there are if there's not enough money to pay all the debts, the available cash goes first to these priority creditors, and they get paid in full. So in simple terms, unsecured creditors with priority are at front of the line to get their money when a person or a business is short on cash. Other creditors without priority may only get paid if there's money left over after the priority creditors are taken care of. So next, priority claimed as exempt. So certain priority of a bankruptcy petitioner is not included in a debtor's estate. This include residential property exemption provided by a homestead clause. So, for example, for this is imagine someone is going through a tough financial situation and has to declare bankruptcy because they can't pay their debts. When they declared bankruptcy, they have to list all their assets, which include things like their home or like their house rather. So now, homestead laws came into play. So these laws vary by state, but in simple terms, they protect a portion of a person's home from being taken away to pay off their debts during bankruptcy. So this means that even if you declared bankruptcy, you can still keep a certain amount of the value in your home. For example, if your home is worth $200,000 and our state's homestead's exemption is 50,000 US dollars, then you can keep your home as long as its value doesn't exceed the exemption amount. The rest may be used to pay off your debts. So, residential property exemption provided by homestead laws are like a financial safety net that helps you keep a portion of your home when you're going through bankruptcy, so you're not left completely without a place to live. So the second one is exemption for life insurance policy payable on death to spouse or a relative of the debtors. So life insurance, which means that if they pass away, their insurance company will give a certain amount of money to their family members, like their spouse or their close relatives. Now, if this person has declared bankruptcy because they can't pay their debts, their they can pay their debts. Some rules protect this life insurance money from being used to pay off those debts. In simple terms, the money from the life insurance policy is considered exempt or safe from being taken away to cover their debts. So, in bankruptcy, certain life insurance policy that pay out the spouse or the close family members of the person who declared bankruptcy are protected. These help ensure that even during tough financial times, the family can still receive the financial support from the life insurance policy. So, role of court in liquidation. So all aspects of bankruptcy proceeding are dealt with the federal bankruptcy court With respect to the debtors and creditors petition for bankruptcy liquidation, the rules of the court include dismiss the creditor's bankruptcy petition or to grant an order for relief. An order for relief is given for filing of a debtor's petition in bankruptcy. So the court also gives order for relief in order to the creditor's petition after a hearing at which the debtors may attempt to refuse the creditor's allegation that the debtors was not paid debtors as they came due. So thus, the creditor's petition may dismiss or ordered for relief be given by the court. So many suits that are pending against the debtors from whom the debtors or the creditor's bankruptcy petition is filed and stayed until the order for relief. So, or dismissed of the petition after the order for relief, such as suit, are further stayed until the question of the debtor's discharge is determined by the court. So the second is the court appoints an intern or trustee to serve permanently or until the trustee is elected by the creditors. This is done after the court granted the order for relief. So the court calls a meeting for creditors after the order for relief within 10 to 30 days. So certainly, let's simplify the role of creditors in appointing a trustee to manage the debtor's estate during bankruptcy. So in simple terms, creditors have a say in picking the person or organization or the trustee that will manage the bankrupt person's or the business money and the property to pay off the debts. So they do this by voting. One with the most votes gets the jobs. So get the job. So this helps ensure that the process is fair and that the creditor interests are represented. So the role of the trustee. So the trustee may be appointed by the court or elected by the creditors. So the trustee is required to assume that the custody of the non-exempt property of the debtor. The principal duty of this trustee are continue to operate the debtor's business if if directed by the court, release the free asset to the debtor's estate, pay cash to unsecured creditors, keep accounting records to enable the filing of a final report with the court. So, invalidate a preference. So, the trustee may be appointed by the court or elected by the creditors. So, the trustee is required to assume that the custody of the non exempt property of the debtors. So, the principal duty of this trustee let let explain it in a simple way. So, in terms of the trustee, so is like a manager who takes care of the bankrupt person or business property, sales if it needed, and makes sure the money goes to the creditors fairly. So they also make sure everyone follow the rules and that the bankrupt process is carried out correctly. So preference is defined as the transfer of cash or property to an outsider. So creditor for an existing debt may made while to the debtors was insolvent and within 90 days of filing of the bankruptcy petition. So this case If the transfer caused the creditors to receive more cash or property than would be received in the bankruptcy liquidation. So in case the trustee may recover from the creditors and the cash of the property cons- constituting the reference and include it into the debtor's estate. That would be all. Thank you.
So I am Mensha Etukeria and I am tasked to discuss about discharge of debtor, the role of accountant in bankruptcy liquidation, and bankruptcy reorganization. I am tasked to discuss about discharge of debtor, the role of accountant in bankruptcy liquidation, and bankruptcy reorganization. So, discharge of debtor. Discharge refers to a release of the debtor from all unliquidated debts. It is the court that determines the debtor's discharge. The role of the trustee is to liquidate the debtor's property and pay the necessary claims. So in the complex world of bankruptcy cases, discharge represents the ultimate release for debtors from their unliquidated debts. This refers to the legal process where a debtor is relieved from the obligation to repay their debts that typically occurs in situations where a debtor is unable to fulfill their financial obligations due to financial hardship or other circumstances. However, it is crucial to understand that only the court holds the power to determine the debtor's discharge. In the context of bankruptcy proceedings, the court holds the authority to grant, deny a debtor's discharge. So this means that it is the court's decision whether the debtor will be relieved of their obligation to repay their debts. As part of the bankruptcy process, a trustee is appointed to oversee the debtor's case. The trustee's role is to manage the debtor's assets and liabilities. One of the main responsibilities of the trustee is to liquidate the debtor's property, meaning to sell off any assets that can be used to repay the debtor's creditors. So after all properties have been liquidated, all secured and priority creditor claims have been paid and all remaining cash has been paid to unsecured, non-priority creditors. So the funds generated from the liquidation of the debtor's property are then used to pay off the necessary claims or debts. By liquidating the debtor's property and paying off the necessary claims, the trustee aims to maximize the recovery for the debtor's creditors and facilitate the resolution of the debtor's financial situation. So in the discharge of debtors, there are exclusion of debts that are not included in the discharge, and these are the following. First, taxes payable by the debtor. So this includes any outstanding tax debts owed to the government. Bankruptcy does not eliminate the obligation to pay taxes. The second is debts resulting from obtaining money or property through false representations or willful conversion. So if a person obtains money or property by lying or intentionally taking someone else's property, those debts cannot be discharged. The third is debts not scheduled by the debtor in support of the bankruptcy petition. So if a debtor fails to include certain debts in their bankruptcy filing, those debts may not be eligible for discharge. And the fourth is debts arising from embezzlement or fraudulent acts by the debtor in a fiduciary capacity. Debts resulting from embezzlement or fraudulent acts committed by the debtor while they were in a position of trust, such as a trustee or executor, cannot be discharged. And the fifth is amounts payable for alimony, maintenance, or child support. Debts related to alimony, spousal maintenance, or child support obligations cannot be discharged through bankruptcy. Is debts for willful and malicious injuries to others, persons, or property. If a debtor intentionally causes harm to someone else's persons or property, those debts cannot be discharged. Debts for fines, penalties, or forfeitures payable to government entities excluding tax penalties. Debts owed to government entities in the form of fines, penalties, or forfeitures cannot be discharged. And the last is debts for educational loans made, insured, or guaranteed by governmental entities or non-profit universities or colleges. The students' loans provided by governmental entities or non-profit universities or colleges are generally not eligible for discharge through bankruptcy. So there are also certain conditions or actions that can prevent a debtor from having their debts forgiven or eliminated. Not that a debtor will not be discharged if, first, the debtor commits any crimes, misstatements, or other malicious acts that are in connection with the court proceedings. So if they commit such thing, they will not be discharged from their debts. This means they will still be responsible for paying their debts even after going through bankruptcy. And the second is the current bankruptcy petition was filed within 6 years of a previous bankruptcy discharge to the same debtor. So if a debtor filed for bankruptcy within 6 years of a previous bankruptcy discharge, they will not be discharged from their debts in the current petition. In other words, they cannot receive another bankruptcy discharge within 6 years of their previous discharge. So the second topic is rule of accountant and bankruptcy liquidation. The rule of the accountant in liquidation proceedings is concerned with proper reporting of the financial condition of the debtor and adequate accounting and reporting for the trustee for the debtor. So an accountant in bankruptcy liquidation has a rule of ensuring proper reporting of the financial condition of the debtor and providing accurate accounting and reporting to the trustee for the debtor. So there are two important financial statements involved in this process: the statement of affairs and statement of realization and liquidation. So the statement of affairs is prepared to present the financial condition of the debtor enterprise. The statement is prepared on the assumption of quitting concern. This is due to the fact that a business enterprise that enters bankruptcy liquidation proceeding is a quitting concern and not a going concern. So as a result, the balance sheet is not appropriate for an enterprise in liquidation. The statement of affairs is the financial statement designed for a business enterprise entering liquidation. So the statement is prepared to present the financial condition of the debtor enterprise during the liquidation proceedings. Since the business is no longer going concern but a quitting concern, the traditional balance sheet is not suitable. So the purpose of the statement of affairs is to display the assets and liabilities of the debtor enterprise from the point of liquidation. The assets of the debtor enterprise are valued at current fair values and presented on a memorandum basis. Besides, assets and liabilities are classified according to the rankings and priorities. They are not presented according to the current classification used in the traditional balance sheet. So the statement of affairs displays the assets and liabilities of the debtor enterprise at current fair values, with carrying values presented on a memorandum basis. Assets and liabilities are classified based on rankings and priorities rather than usual classification used in a balance sheet. So the second is statement of realization and liquidation. The liquidation involves realization of the assets of the debtor state. Statement of realization and liquidation is based on the assumed activities of the trustee for the state of the bankrupt firm. So this statement focuses on the activities assumed by the trustee for the bankrupt firm state during the liquidation process. It involves the realization of the debtor's assets. The statement is accompanied by the statement of cash receipts and cash payments, which provide details of the cash inflows and outflows related to the liquidation proceedings. So the third topic is bankruptcy reorganization. Bankruptcy reorganization. So when a business becomes insolvent, it does not have enough cash to meet its interest and principal payments. Then the decision must be made whether to dissolve the firm through liquidation or to permit it to reorganize and thus stay alive. So when a business becomes insolvent, the decision must be made whether to dissolve the firm through liquidation or allow it to reorganize. Bankruptcy reorganization refers to the process that occurs when a business becomes insolvent, meaning it doesn't have enough cash to meet its interest and principal's payment. In such situation, the decision needs to be made whether to dissolve the firm through liquidation or to allow it to reorganize and continue operating. The decision to force a firm to liquidate versus permit it to reorganize depends on whether the value of the reorganized firm is likely to be greater than the value of the firm's asset if they are sold off piecemeal. So the choice between liquidation and reorganization depends on whether the value of the reorganized firm is expected to be higher than the value of the firm's asset if they were sold off individually. The liquidation involves selling off the firm's asset to repay creditors, while reorganization aims to negotiate a plan that allows the firm to continue its operations. So in a organization, a committee of unsecured creditors is appointed by the court to negotiate. So with the management of the term of a potential reorganization, the reorganization may call for a restructuring of the firm's debt. The restructuring of debts involve reduced interest rate, lengthen the term of maturity, exchange some debts for equity. So during a reorganization, a committee of unsecured creditors is appointed by the court to negotiate with the management on the terms of the potential reorganization. So this committee works to restructure the firm's debt, which can involve reducing interest rates, lengthening the maturity term, and exchanging some debts for equity. And the purpose of restructuring is to reduce the financial charges to a level that firm's cash flows can support. So in addition to the committee, the court may appoint trustee to oversee the reorganization. The goal of debt restructuring is to decrease the financial burden on the firm so that its cash flows can sustain the organized business, and the court may appoint trustee to oversee the reorganization process, so ensuring that it is carried out fairly and with the best interest of the creditors.
So hi, my name is Aljalin D. Capas and this is my topic, Appointment of Trustee or Examiner. So the management or owners of the business enterprises may continue to operate the enterprise as a debtor in possession. So alternatively, the court may appoint a trustee to manage the enterprise. So the purpose of appointment of the trustee are, so number 1, to reduce fraud, dishonesty, incompetence, or gross management by current owners or the manager. So number 2, to protect the interest of the creditors or stockholders of the enterprises. So where the organization involves the trustee, examiner may be appointed to investigate the possible fraud or mismanagement by the current manager or owners of the enterprises. So, the power and duties of trustees includes prepare and file of creditor in court. Then the list includes the class of creditors and their claim and the list of stockholders of each class. So number 2, investigate the act, conduct a conduct proper liabilities and business operation on the enterprise. So the trustees indicates that the desirability of continuing the operation. So number 3, report the bankruptcy to the judge any facts of uncertain as to fraud against the mismanagement of the debtor enterprises. So the management or owner of the company may keep running the business as a debtor possession. So as an alternative, so the court could name a trustee to run the business. So the next is plan of reorganization. So the management or trustee is required to submit the plan of organization to the bankruptcy court. So the same plan may also be given to the creditors and stockholders of the enterprise. So the purpose of submitting the plan of reorganization is for confirmation by the bankruptcy court. So before the plan reorganization is confirmed by the court, the plan must be accepted by these following parties. So number 1, majority of the creditors whose claim must account of 2/3 of the total liabilities. So liabilities means utang, something like that. So stockholders. So number 2, stockholder owning at least 2/3 of the outstanding capital stock of each class. So if one or more classes of stockholders or creditors has accepted the plan, the bankruptcy court may confirm if the plan is fair, so and equitable to the non-acceptors. So if the plan of reorganization is confirmed by the bankruptcy court, it becomes binding in the debtor enterprises on all creditors and owners of the enterprises and any other enterprises issuing securities and acquiring property using the plan. So accounting of reorganization. So accounting for reorganization involves entries for the following adjustment. So involves journal entry. So we know the accounting process. So the first one for accounting process is journalizing. So you journalize all the transaction. So the next is put it to the general journal, then do the adjusting entries, do the trial balance, then post-closing trial balance, then all the accounting process. So number 1 for accounting for reorganization is carrying amounts of assets. So assets, the things that you own, the equipment that you own is an asset. So number 2, reduction of par or stated value of capital stocks. Number 3, extension of due dates and revision of interest rates of notes payable. So revisions of interest rates of notes payable. So what do you mean by notes payable? So notes payable is a promissory note. So example for that is you buy a new furniture. So the company applies for loan to the bank. So the bank approve the loans, but issue the company a promissory note. So that is notes payable. Next is exchange. Number 4 is exchange of debt securities for equity securities. So debt security includes notes payable, bond, etc. Equity securities primarily include common stocks and preferred stocks. So we know what stocks and preferred stocks, then the elimination of retained earnings deficit. So the reorganization enterprise is essentially a new enterprise whose asset and liability should be valued at the current fair values and whose shareholders' equity consists only of paid of in capital. So illustrate the accounting for a reorganization. Suppose Topcon company has the following assets, liability, owner's equity before bankruptcy petition by the debtor. So this example is an example for the balance sheet. So this is a financial statement. So financial statement composed of 5 So the one is balance sheet. So this is an example of balance sheet. So the first one for this example for the Topcon company balance sheets as for December 31, 2003. So under the asset, they have two. They have two, the current asset and the non-current asset. So the Topcon company only have the current asset. So the traded assets total. So this is the total for the current assets is 95,000. Total liabilities to stockholders. So this is a sample of a Topcon company as for December 31, 2003. So this is a financial statement composed of balance sheet.
I am Jamaica Bordo Pausal. I am your last reporter. And this is the continuation of accounting for our reorganization. Stockholders and all unsecured creditors have approved the plan of reorganization the bankruptcy court has confirmed. So it means that the plan of reorganization has been approved by the board of stockholders and unsecured creditors, and the bankruptcy court has confirmed it too. The plan of reorganization is described below. Number 1. Deposit of BR 40,000 with extra agent to cover liabilities with priority and cost of reorganization proceedings BR 7,000. Salaries and wages employees income tax payable are liabilities with priorities. When you deposit BR 40,000 in an escrow agent, is cover liabilities with priority and the cost of reorganization proceedings, which amount to 7,000. So, the liabilities with priorities include salaries, wages, and employees' income tax payable. It's an important step in the reorganization process. So, number 2 is amend article of incorporate to provide for 10,000 shares of authorized common stock of BR1 par. The new common stock in the exchange of a share for share basis for the 600 shares of outstanding BR100 par common stock. So it means when you deposit so it means that the company wants to change their article for incorporate to increase the number of authorized common stock shares to 10,000 with a par value of BR1. They also plan to exchange the existing 600 shares of BR100 par common stocks for the new common stock on a 1-to-1 basis. It means that each existing shares will be replaced with 1 shares of the new common stocks. So number 3, extend due date to unsecured notes payable to supply totaling BR 50,000 for 3 years until December 31, 2007. Increase the interest rate on the notes from the state rate of 10% to 12%. So it means the company wants to extend their due date for their unsecured values payable to supplies, which amounts for BR 50,000. They want to extend it for 3 years until December 31, 2007. Additionally, they plan to increase the interest rate on the notes from the current state rate 10% to 12%. This is likely being done to provide more than 4 prepayment and to adjust the interest rate for better align with current market conditions. So number 4, exchange 2,000 share for a new BR1 for common stock, a current fair value of BR20, a share of unsecured notes payable to supply totaling BR 40,000. So the company plans to exchange 200 shares of their new BR1 par common stock, which has a current fair value of BR20 per share. They will exchange allows the company to use the shares as a form of payment of settle their outstanding debit with the suppliers. So number 5, pay suppliers 60 cents per dollar of rate accounts payable crowd. So the company plans to pay their supplies 60 cents per dollar of the trade accounts payable owed. This means that they are offering to pay 60% of the total amount owed of the supplies. It could be a negotiated settlement of or a discount offered by the company to settle their outstanding debt with the suppliers. So, nakafamiliar naman mo sa journal entries. The journal entries to record the reorganization are shown below. To record the deposit of cash with escrow agent. It means that the money is now being held by the escrow agents for a specific purpose, like a real estate transactions or a legal agreement. So, ang debit kay cash with escrow agent with cash of 40,000 and credit cash ang credit for 40,000. So, sabihin na ta. To record escrow agent and payment of liabilities with priorities. It means that the escrow agent has made a payment to settle a high priority obligation on behalf of the parties involved in the escrow arrangement. So, naatay duha ka debit. Salaries and wages payable. And the one is employees' income, taxes payable, which amount of 10,000 and 25,000. Then the credit is cash in escrow agents. Sa C is record the payment for one and bankruptcy proceedings. So it means that the payment has been made to cover the expenses associated with the bankruptcy process. So, ang credit kay cash with escrow agents and the debit is cost of bankruptcy proceedings. Okay, number 2. To record insurance of the 60 shares of BR1 common stocks exchange for 600 shares of BR1 per 100 per common stock. So it means that the company is issuing new shares of common stock in exchange of existing shares at the different value of pair shares. So, ang debit kay common stock BR100 par with 60,000 and the credit is common stock BR1 par and paid in capital in excess of par with a debit kay common stock BR100 par with 60,000 and the credit is common stock BR1 par and paid in capital in excess of par with amount of 600 and 59,400. So number 3, to record the extension of due date on notes payable, you should
debit the specific notes payable account. This means that the due date for the notes has been attended, giving more time to repay the borrowed amount. So, ang debit kay 10% notes payable to supply due to date December 31, 2004 with amount of 50,000 and the credit is 12% notes payable to supplier due date December 31, 2007 with amount of 50,000. Number 4, to record exchange of 2,000 shares of BR1 for common stock for notes payable to notes. Okay, so you would debit the notes payable account and credit to common stock account. This means that the company has issued common stock in exchange for reducing its outstanding notes payable. So, ang debit is notes payable to supply with amount of 40,000 and the credit is common stock BR14 with amount of 2,000 and paid in capital in excess for par with amount of 38,000. So number 5, to record the payment for BR 0.60 per BIRR of accounts payable to suppliers. So it means that the company has made a repayment of BR 0.6 for each BIR owed to supplies. So we have a debit trade accounts payable with amount of 20,000 and the credit is cashed 20,000 times 0.60 with amount of 12,000 gained from discharge and indebtedness of bankruptcy with amount of 8,000. So assuming that the fresh start reporting is appropriate for the company under the consideration after the plan of organization has been carried out, the following journal entry is made to eliminate